What I want to talk to you guys about is credit, and in particular, why lending is so hard.
Mm-hmm.
How do we provision more credit? And you guys are thinking about this a lot, so I'm eager to hear what you think. But let's start from a carbon perspective. Why is lending so hard in Africa and Nigeria and across the continent?
The obvious ones are, for a lot of the African countries, there isn't the credit infrastructure. There isn't like credit bureaus, functioning credit bureaus outside South Africa, Kenya, that you haven't got credit bureaus that all have, let's say, a score that people can actually lend against. And then identity is an issue as well. And then collections. We've all these three. That's where you get the challenges in giving out credit.
Yeah. Can you maybe just talk about, from a carbon perspective, in spite of the sort of myriad of difficulties with lending, you're still doing lending, right? So how do you lend in that context that you just described?
From a scoring perspective, we create our own scores, right? And that's been through creating algorithms, testing them against actual results and refining them. And of course, we ingest a lot of data from our customers directly from her transactions on the Carbon app. We also make use of open banking platforms where we can also ingest bank statement data and any other data that we feel is relevant. In Nigeria, we have 3 functioning credit bureaus. Now, we don't have a score, but what we have is a database that lets us know if she has taken loans out in the past and also whether she performed or not. So we also have that data. In terms of collections, the best form of collections is when you don't have to do it, to be honest. And so we do a lot of soft collections. But when you have to employ, let's say, debt collection agencies, all they can really do is call, send messages. And when I say call, I don't mean harass. I mean like literally just say, hey, you're 90 days late on your carbon loan. Send SMS messages as well. And then if it's a bigger loan, then would have a field agent go out and serve notice to the customer. That's all we can do.
Yeah.
And that's what we do.
So, Mark, we heard credit infrastructure as part of the problem. I know that's your arena, trying to focus on KYC and working across a bunch of different countries around this sort of identity challenge. It's always an interesting question to me. Why isn't there more credit infrastructure? Why aren't there credit bureaus? Maybe you can talk a little bit about your experience dealing with the various government agencies around this identity issue and the way in which you try to attempt to address it so that, credit and lending can be more plentiful in these markets that you operate.
Yeah, it's funny when you asked me about this, the idea for this podcast, and you said, well, we're going to talk about lending. I was kind of chuckling because we're not a lending company, and some of our clients obviously do lending, but not everybody. Well, I started my career in emerging markets doing microfinance in India, so I'm very familiar with the sort of the building blocks of lending, and obviously in many emerging markets and many emerging economies, credit scoring has been a challenge. I'd say it's uncommon that there's like no credit bureau in a country. There's always somebody who started something. Sometimes there's 2 or 3, but this phenomenon of thin file, is a very common thing. So you'll have a country where there is a credit reference bureau, but they have records on maybe 3 million people in a country of 30 million people. Or they've got, maybe they've even got 20 million records, but half those records don't really have a complete file. Maybe they only include a handful of negative events. They don't have any positive data. So these things all make it really challenging. Obviously, lenders then look for other signals. What are the other signals you can do to reduce risk or fraud? KYC is one of them, whether that's just verifying an ID number or a name or a phone number or a document or a face. And of course, the more things that you verify, the more costs you add, the more level of assurance you have. The reason I even started the company, I sort of go back to why was I interested in this problem? I sort of go back to the India days. It was how do you help lower income people get money? Well, lending is the only really way to do that without charity. And to do lending, you need these different pieces of information in place. And I ran into this issue of realizing as the more people I talk to, especially who are in the lending business, how much time and energy and effort they spent trying to solve the KYC issue, rolling their own solutions or using Facebook as a proxy. There just weren't that many great solutions when we started the company 7 years ago. The credit infrastructure problem is multifaceted. Credit scoring and credit data is certainly part of it. The KYC is like an underlying foundational piece. But our hope with our business is that we can lay down that one foundational piece, and then there's other things that can be built on top of that. And I think in particular, a lot of the companies we work with who are in lending are building their own credit scoring models and methodologies, which have proprietary value for them, which is great. We hope that we can provide them sort of a basic level of KYC upon which they can build.